But for people who are trying to build wealth, people who are trying to get to that first one, $2 or $3 million, the prospect of saving for college provides some obstacles because you want to put your one, two, three kids into college, but you also don't want to derail your wealth building plans, but you also don't want them to have all this debt. Hello and welcome back to the Wealth Equation Podcast. I'm your host, Maurice Wilson, engineer turned financial advisor. And today I want to talk about college savings plans and how we go about putting our kids and loved ones in college. And is there a way to do it that's going to allow us to build wealth? So, my problem with 529 plans, right? 529 plans and these old school accounts called the Coverdale Savings Plan and just any account that's specifically dedicated just to college. The thing is, for people who are trying to build wealth, I'm not talking about people who are already retired, people who are already wealthy or who are making lots of money a year. But for people who are trying to build wealth, people who are trying to get to that first one, $2 or $3 million, which is basically what you need to basically say, I'm going to quit my job. I need $1 to $3 million, depending on where you live in this country, to quit your job. Um, the prospect of saving for college provides some obstacles because you want to put your one, two, three kids into college, but you also don't want to derail your wealth building plans, but you also don't want them to have all this debt. And so uh, in comes these 529 plans, these prepaid college savings plans that are offering tax savings on the back end and some tax savings up front if you will put this money in an account that's earmarked just for college. They've opened up some provisions lately where you can also use the money for books, for private school, K through 12, things of that nature. But the general impetus of these accounts is that it is for college. So my number one problem with the whole concept of these accounts is simply that it violates one of the principles of money, which is to me, money does grow on trees, but you got to plant the seeds and keep the tree. And what do I mean? When you think about it, I try to tell my retirees, you want to die with money in the bank. So if I look at your account and you are 65, 70, 75, 80, you've got $3, $4 million generating, 200,000 a year. The irony of that money is you will probably never spend all of that money. And that's a good thing because you don't know when you're going to pass. And it's not like you want to time up your account going to zero with the day you pass, right? You're going to have so much anxiety. So you don't ever want your account to be at zero. People understand that. So if in retirement, you wouldn't go out and say, okay, Maurice, I'm getting ready to go on a trip. Let me pull out $1 million to pay for this $1 million trip. You would finance that trip, right? You would finance a house purchase. With college, we have this big financial goal that we're saving money for, but we pull all the money that we save for it out and kick it out over 3 to 5 years, depending on however long your kid's in college. The problem with that is when it's done, that money no longer works for you. You're doing all of this to get your kid a job. At the same time, you're firing one of your hardest workers, which is your money. Your money is going to work harder than you ever will because your money doesn't get tired. Your money can go to all these different occupations. Your money could be invested in Google. Your money could be invested in Home Depot at the same time. You can't work at Google and Home Depot at the same time. You can't mine for crypto coins and work at Google and Home Depot at the same time. You can't switch careers and become a scientist and invest in Boston Scientific while working at Google, while working at Home Depot, while mining for crypto. Your money can do all of those things and do it much more efficiently. So your money is your hardest worker. But what we are trained to do when we look at college savings is take our hardest worker off the field because we don't want anybody in our family to have student loans, right? Because student loans have become this pariah. Why are student loans a pariah when mortgages aren't a pariah? Credit card debt is kind of a pariah, but we understand it. adding an addition to the house, getting a car. We finance all of these things. We put things on layaway. There's Klarna now. We do all these things where we understand the financing of this goal. But it's this thing with college where we gotta get that paid in full in 48 months, 60 months, no debt, kids out looking for a job, and we fired the hardest worker in our family, which is our money. We took it all out and gave it to the college so we could feel good about not having debt. So my number one problem with 529 plans and just college savings plans, whether it's prepaid, 529, is that if you don't have 1 to 3 million already, these accounts do not help you build wealth. They just do not. They make you feel good, but they don't have you build wealth. What do I mean? Okay, you have 1,000 shares of Nvidia 5 years ago, right? Um, Now you don't know Nvidia is going to go up 3 times in the last 5 years. But when we invest money, we do expect our money to double in a reasonable amount of time. So you got 1,000 shares of Nvidia. You're like, oh, okay, Maurice Jr., you're getting ready to go to college. College is going to cost about the amount of these 1,000 shares of Nvidia. Let me sell all my shares and give it to Tennessee State University, Benedict College, schools I went to. Now, no debt, we're good. And in 5 years, you're out here looking for a job in the AI, warped economy, the weird economy we're in now, where we're having a white collar job recession. All the weird things are going on. You don't have any debt. Congratulations. You're out there naked. We got rid of our Nvidia shares. That makes no sense. That makes no sense, right? Because those 1,000 shares are now worth 3 times as much as they were 5 years ago. So we could have paid for college and gave you money to buy a house that people can't afford now. We could have paid for college and put you maybe in a skilled trade because now you got to reskill yourself because we're in a white collar jobs recession. We could have done all these things because we had the money, and money can't make you happy, but it does give you options. You're throwing away your options when you earmark 18 years into the past. I am using this money just for this thing because I don't want my child to have debt. I myself may not be wealthy yet, rich, have 1 to 3 million yet, but guess what? We have no debt. Everything's working for us, right? And it's not. It's not. It's like trading away Micah Parsons, like the Dallas Cowboys did. It wasn't a well thought out move. It may work, it may not, right? Your child walking across the stage debt free in when they graduate from college may work out. It may not. They may be home for 3 years looking for a job. Okay, so you want to keep that money in house. That's my number one problem with 529 plans. They do a lot of amazing things if you've already got money. In fact, 529 plans are really for people who have money. The contribution limits are sky high. Most people are used to saying, okay, I know I can put about 20,000 to 30,000 into my 401k. You're mostly correct. I can put about 7 to 8,000 into my IRA. You are correct. I can put about, most people don't notice, I can put about 50 something thousand in my SEP IRA. Yes. But what trumps all of that, you can put about 300,000 into your 529 plan. Why is that? Because these plans are for people who have money already. They're not for people who are trying to build wealth. And this is a show about people trying to build wealth. This is the Wealth Equation Podcast. If you're enjoying content like this, please subscribe to Wealth Equation Podcast. We try to come out here weekly. I am a financial advisor, a former engineer, run a firm called Wilson Wealth Management. Definitely check us out. Let's get back to it. So Maurice is great. You don't like 529 plans. You know that's good. What is the option, right? What can we do? All right. So if you just feel guilty about not having an account just for college, right? You can earmark a certain amount of money. If you want 1 year's tuition squirreled away just for Johnny's education, yeah, maybe you drop that in the 529 plan. That won't kill you on the wealth building curve. But after that, you want accounts that give you options. There are accounts out there that give you better investment options. Can I say that? Yes, because 529 plans are just limited to mutual funds. And it's not that mutual funds are the worst, but you can't say you have the best options if you're limited to one type of fund. Okay. Right now, we're sweeping across this country legislation to allow investors to invest in private assets inside of their 401k plans. All right. I'm not saying that's where you should put your money, but what they want to do is open up the palette of investments. I actually do not agree with private investments in 401k plans, but they want to open up the suite of investments for people to invest in. Okay. I argue along the way they should add individual stocks. Some 401k plans have them, a lot of them don't. But that's where I'm going. If you invest outside of the 529 plan, you can do crypto, you can do individual stocks like Google, Amazon, Home Depot, AbbVie, Palantir. I know that's a bad word. Palo Alto Networks, for people who can stand them Tesla. You can buy those companies, right? Uh, in addition to buying mutual funds. But if you're just limited to mutual funds, you can't argue that I've got the best stuff working for me. So you're looking at your child, they're born, they're in the crib, they finally sleep. You want to do the best you can for that child. If I said, look, there's this account that's going to put that child through college, but you can only invest in these types of investments. Well, if you're intellectually curious, you would say, well, why can I only invest in these funds? Is there anything else out there I can invest in? And why can't I? Well, those are good questions to ask. And if you're asking questions like that, then you've got to get beyond just 529 plans. You've got to start looking at other types of accounts. So reason number one, I don't like 529 plans. Hey, to me, they take your hardest worker off the field. They earmark money just for college. So you have this money tree in the backyard making money for you. Johnny turns 18. You take a chainsaw to that tree, cut it down, give it to the university. Now we don't have a money tree no more. Well, that doesn't work if you're trying to build wealth, right? You want to keep that money tree, pluck that fruit. So reason number one is it perverts how we use money to build wealth. And it reverses it and says, okay, just use it for college. No, we use the money for a whole lot more stuff than just college. Right? We want to take trips. We want to live the life we want. We want to quit our job. We're not just trying to pay for college and go to work, right? That's insane. Reason number two is the investment options are not that awesome, right? For some reason, 529 plans are just limited to mutual funds. Why is that? Hey, welcome to Wall Street. Some things happen on Wall Street that make no sense unless you're the person benefiting from it, right? So there's got to be a reason why only mutual funds are in 529 plans, right? So take that for what it's worth. you know so investment options are not that great. All right, reason number three is there's more you can do with your money in different account structures. Right, there are accounts that let you borrow against your investments to spend the money how you please. There are accounts that let you borrow against your money to invest more in the market, right? So you can have more uses for that money while keeping that money in the market working for you. The best way to think of it is like a home equity line of credit for your money. Like, I'm going to keep this house, but I'm going to take out some equity from the house, still keep the house overhead, but I'm going to do other things, start a business, pay off other debt, buy a car. Hey, maybe send somebody to college, right? But I'm going to keep my house, and while I'm using the equity for these other purposes, guess what? House is still going up in value. What happens if the house goes down in value? We call that collateral. Sell the house, pay off your debt, walk away with proceeds still. But now you've introduced duality to your money. It's not just going to one of the US 100 best colleges and universities, right? To get a job. I mean, do we really want our kids? Is that the high water mark for our kids that you are able to get a job? I tell my neighbors, it's like if my kid goes to college just to get a job, there's nothing wrong with getting a job, but just to get a job, and that's all that they're going to college for, then why did I go to college? Because that's what I went to college for, and that's what my parents went to college for. At some point, we gotta advance the football. We gotta advance the ball beyond just getting a job, right? Are you getting a job because you want to know a certain skill set to add to the family business? Are you getting a job because you want to get a certain skill set because you want to follow your passion? But if you're just getting a job to survive, That's where I'm going with this. Then why did I go to college? Because technically I'm supposed to have a better life than my parents, and then my kids are supposed to have a better life than I did. So we're all just going to college to get a job. We're on a hamster wheel now. We violated this whole point of higher learning. So we got to think about this whole college thing in general. I'm pro college. I'm pro paying for college. I'm pro no debt, but there are ways to do it. So there are accounts that give you a duality of money that the 529 plans cannot. Why am I not telling you what the account is? Because I am a licensed advisor. You are welcome to call me and we can dig knee deep into what those accounts are, because then I would be giving you specific advice and it'd be under the cover of how my industry works. Unlike a lot of people that come to you on YouTube, and I'm not saying anything bad about the people that come to you on YouTube. Heck, I even learn stuff from people on YouTube, and I'm not an Instagram guy. But when you're licensed with me, you're going to get all of the barriers, right, to keep me from giving you misguided advice. And so that's one of the benefits, is that anytime I get too close to something, I'm going to tell you, hey, come into the office, give me a call, wilsonwealth.com. Get something scheduled. We can talk about your particular situation. All right. So first, saving for college, it warps what we do with money. It says, okay, instead of saving money to do all these different things, I'm saving money just to go to college. That's not how we look at money in any other instance, right? Reason number two, um, the investment options in a 529 plan are not the entirety of options that are available for most investors. So why would you pigeonhole yourself? You can't say I'm trying to build wealth and trying to do the best by my child if I'm pigeonholing how we invest, what we can invest in. Reason number three, other accounts give your money more duality. You can borrow against it to invest more, borrow against it to do stuff outside of the account. They give you a duality, and that's something that you have to consider. And then reason number three is taxes, believe it or not. So if you don't send your kid to college through one of these special savings plans, well, guess what? You got to pay taxes on that money. Um, and so there are other accounts that can give you different tax outcomes. There are accounts that can give you a tax-free outcome. There are accounts that can give you what's called a step up in cost basis. There are accounts that can still give you deferred tax growth to some extent, and then give you a lower taxable gain when you pull it out. So there are accounts out there that can give you different tax characteristics, and it's not a either or game. Hey, don't use this for higher education. We are going to tax you, right? So what if you could use the money for higher education and studying abroad and a down payment on a home, right? And still pay lower taxes. If that was on the table, you have to consider that. So reason number four is just the taxes. It's always the taxes at some point with these investments. With how we say, we want to. If you go to my site, we talk about tax free and tax efficient. Most folks do not know they're building tax time bombs in their retirement accounts, but they are. It's not a problem until you reach 59 and a half and you reach for your money, and hey, you owe the government 20 to 30%, you owe state 5 to 7%. Now 40 something percent of your money has been taken out for taxes. Then it's a problem. So it's a tax time bomb right now, but then when the timer goes off, it's a problem. So there are ways to avoid that, particularly for saving for college, that are outside of the traditional 529 savings account structure. Again, not banging on 529, even on my own site, YouTube, and on my Podbean, we talk about the benefits of 529 plan, but you'll notice that those benefits are skewed to the higher end of class and income in this country. They're not skewed to the people who are formerly middle class, because really there's no more middle class. You either are building wealth, you're going to go up into the top 5-10% of households, or you're going to slide down. This country no longer supports middle class. That's okay, right? Middle class is something that has to be supported. Maybe that'll change. That's not a political statement. That's just where we are. No big deal. What do you need to support middle class? Entry level home prices, entry level tuitions, right? We don't have that right now. So you can't have a strong middle class if you can't get a house and send your kid to college without breaking the bank. So that's not a political statement. That's just a reality. Somebody show me a great home priced under 200,000 or a 4-year institution where I can send my kid to college for less than 50,000. Now we're back to supporting the middle class, particularly if middle class wages have been stagnating for so long. Um, the salary I came out of college with as an engineer is, when you adjust for inflation, is higher than the starting salary today for engineers. That's not supporting the middle class. So the middle class has got to realize where they are and say, okay, we got to build and get out and get into the top 5, top 10% households of wealth, or we risk sliding below or hollowing out. So guess what? Hand jamming a lot of money into a 529 plan just so your kid doesn't have debt and giving it to .edu, that does not get you up and into the top 10%, top 20% of households for wealth, because you're taking your money off the table. And that's not great for building wealth. Your money can do so much. More money, more options. It can't make you happy, right? If you're not happy, the money won't make you happy, but it does give you a lot of options. You can take a long trip, figure your life out. You can quit your job, figure your life out. You can take lower paying jobs with a lot more meaning and start adding meaning to your life. So much of the meaning that we lack in life right now is just because we're so busy trying to make money, right? We never get a chance to evaluate ourselves. What do I mean? K through 12, get straight A's so you can get to a great college. Work real hard in a great college. Get an internship so you can get a great job. Get a great job. Start a family. Get your kid into college. And before you know it, you're 50 and you're trying to figure out, well, what did I do all this for? Was any of this for me? When do we get to hear our internal voice if we're always trying to make money? So if you have that money already, you can start to slow down and figure your stuff out. Um, and so that's one of the biggest gifts you can give your kids, is the ability, the freedom, the option to figure out what they really want to do. And by proxy, you can figure out what you want to do. So didn't mean to get too deep on you guys, but that's just, these are the types of conversations I have with my clients all the time. Beyond money is something that we rarely talk about. It's more than just setting money aside, just figuring out what's going on beyond just filling up your piggy bank. But let's recap before we get going. 4 reasons why I'm not as enthused about 529 plans and just saving for college. Reason number 1 is it perverts how we use money. Money should not be for just one thing, right? Money can do a lot more than just one thing. Money is your hardest working asset. Do not throw it away so your kid cannot have student loans, right? That's not smart. That's not smart. And it's not good if you're trying to build wealth. Right. Reason number 2, I didn't write these down, so I gotta give them an option. But reason number 2 is going to be the investment options. Okay. 529 plans and their cousins limit you to just mutual funds. Well, you want more investment options. You want more investment options than just mutual funds. It would be like me coming to you and saying you can only use CDs and vinyl from here on out. What about streaming? No, we aren't. Streaming's good, but we're only using CDs and vinyl. Vinyl's got some great sound, but it takes up a lot of space. CDs are cool, but they get stretched, and they gotta have their own case or one of those CD pile-ons, and you gotta look through it, and it's very cumbersome to use, and it's just hard. And most of us don't have CD players in our car. So, so if I just limited you to one aspect of the investment universe, you should be asking questions like, is this the best thing for me? Well, maybe, maybe not. Reason number 3, duality. There are accounts that give you more options on how you access your money. And one of those is the ability to borrow against your money, to kind of have like a home equity line of credit against your money. That's something that you have to consider. I'm not saying you just use it for college, but if there are other ways to do this thing, we need to think about it. Okay. We have to consider that if we're truly trying to build wealth and get up and out of the middle class and into that top 10, top 20%. We can't take options off the table. We gotta look at that. And then finally, taxes. There are accounts that give you different tax characteristics with your money that maybe a 529 can't meet. 529 is an either or game. You either use it for higher education or you pay the taxes. Okay. What if you could use it for whatever you want, still pay some taxes, but pay taxes a different way? Construct how you want to pay those taxes, when you pay those taxes, if you pay them at all. Okay. Because that's on the table. So those are the four reasons why I'm not a big fan of 529 plans for people who are trying to build wealth. Let me know your thoughts. Feel free to drop me a line or subscribe. This is the Wealth Equation Podcast. I am Maurice L. Wilson, engineer turned financial advisor, reminding you that wealth building is a problem that should not be avoided, but solved. The challenge is finding the optimum solution. Please join us again next time on the Wealth Equation Podcast. Thank you.